Welcome to today's episode of Peak Market Watch. We speak with market leaders in commercial real estate and related services who have a close pulse on the current market environment. My name is Anton Mattli, co-founder and CEO of Peak Financing, and I'm honored to welcome Laurie and Scott Florida, who have a very interesting background, showing that there are different paths to real estate investing. Welcome, Laurie and Scott. It's a pleasure to have you both with us today.
Absolutely. It's so great to be with you, Anton, always.
Yeah, we're really enjoying this.
Yeah, definitely. As I mentioned, you have a very different background from most real estate investors. So why don't you give us a little bit of a history lesson of where you come from and what you have been doing so far?
Absolutely. Well, we started out, felt like we were being, called to step into full-time ministry. And so I've served as a pastor now for the last 30 years. And one of the first things that happened is we needed to find a house. And so we started looking for a place to live and started finding that the neighborhoods where we could afford didn't provide the size that we needed, or didn't provide the location that we were looking for. It wasn't close to where we were working and serving. And so we found ourselves just like, what do we do? And we had a friend that had a duplex, and they invited us over for dinner. And so we went over to their place, and as we're looking at their duplex, we're like, man, this is nicer than any of the places we've looked at. And he said, yeah, it's pretty nice too, because you got somebody helping you pay the mortgage. And so we were like, wow, that sounds cool. And so we started looking for that as an option, and actually found a duplex just a block down the street from them. And we bought it, and it was fantastic. We had somebody living next door, and it just so happened to be a lady that had just recently lost her husband, and she had a small daughter that lived with her. And so it gave us this sense of not only providing for our family, but also being able to help somebody else, because we took care of, whatever the problems were. We took care of the lawn and all of that. And so it gave us this kind of dual win of having a great place to live, but also being able to provide housing for somebody else. And so that's kind of the initial start to our real estate investing.
Yeah, we felt that was the main reason that we got into real estate investing was just to provide for our own needs. And then along the way, realized that it had so much synergy with other values in our life that it became an attractive option for us beyond just where we were living. And so the neighborhood that our duplex was in was a neighborhood full of duplexes. So it was 3 cul-de-sacs with just duplexes, and we would take walks with all of our little kids in strollers, and Scott would identify, if this one comes for sale, if this one comes for sale, we want to add these to our portfolio. And it gave us a vision for, we can do this. It was an avenue also. I have a teaching degree, but we had a bunch of small kids in our home at the time that I really wanted to stay home with if I could avoid having a 9-to-5 job. And so it gave us a side hustle that I could do with a stroller or a baby in tow. I could show our properties and do the lease ups while Scott did the maintenance. And so we self-managed for a long time those duplexes in that neighborhood, and learned a lot about real estate, but for a long time didn't see it as anything other than a vehicle to just provide for our daily needs. That was some knowledge that slowly grew later as Scott did some further growth.
Yeah. So the next phase for us, and the next step was probably about 6 or 7 years ago. We hit one of those spots. We've been in the same ministry at the same church for the last 27 years, and it's not a huge church, but it's a wonderful place to be, and we love serving there. And, as our family grew, we went from, 1, 2 kids, then we added a set of twins, and then a couple more kids, and then adopted a couple. So we ended up with 8 children, and providing for 8 children is a pretty big expense. And even though we had those duplexes and things were going well with them, we still found ourselves feeling like, man, it's really tough to come up with money to buy cleats. We rarely saw the inside of a restaurant. And so we were just like, man, it would really be helpful to figure out a way to expand this. Yeah. And so we were praying about it and just saying, God, we need some direction. And really felt like God was telling us, hey, dive into real estate some more and learn what you need to learn.
Yeah.
And so
view it as a business.
Yeah.
Yeah.
And
I feel like a great description of the transition that happened for us then was learning to see it as a side hustle kind of hobby and trading that vision for learning to view this as a business that we could develop and grow in. And Scott really took the reins and started to educate himself and get some mentors and led us in a whole new direction that broke things open for us and allowed us to expand in ways that we hadn't imagined. We wish we had imagined that 20 years ago, because we would have enjoyed those benefits sooner. But it was a path of slow knowledge and understanding that I feel like has really served us. Yeah,
absolutely. And one of the, the key relationships that we developed, the key sources of learning, was the real estate guys, which ultimately led to us, meeting you and Sandra and building that relationship as well. But that process of learning how to maximize the equity that we had built, because by this time we'd owned those properties for 10, 15 years, working with, other lenders like Stephanie Riley, and seeing the benefit of how to maximize that equity and push that forward really made a big difference for us. And we started to see an immediate bump, not only in our cash flow, but in our net worth through, the ownership in those additional properties that we added. And that opened another door, another window for us to see, okay, this is something that we could teach other people to do. Now that we've kind of feel like we've dialed it in a little bit, we've got some good relationships with some property management teams and providers in various places around the country. We think we can train people and teach people how to do it. And so that really led to this next phase of our lives, which is starting to help other people with their investing. And so we help people, friends probably purchased between 10 and 15 individual single family houses through our mentoring and guidance. And that was a big step for us, feeling like now we've moved from being able to just do it for ourselves and feel the benefit of it to being able to help others as well. And so that opened kind of another window, which led to the starting of Common Grace Capital in 2020.
Yeah, very cool story. So how many units did you own in your neighborhood there? How many duplexes?
We ended up with 2 duplexes in the neighborhood, but then we also managed that other property that our friend owned. So we ended up with the 6 individual units that we were managing and caring for. And, even that whole process, when we adopted our 2 daughters, that moment of adopting them brought me to the place where I knew I couldn't manage those properties anymore, because they came to us as teenagers. So I knew I had about 4 years of being their dad. And so I had to really maximize my time with them. And so that was the moment when we started thinking we need to find a manager.
Yeah, professional management.
And hire them to take this over. And that was a game changer for us, because that was the moment where we learned how to find a manager, what we needed to do in order to be confident enough to trust them to take over the property. And that opened the door for additional purchases outside of our local market and into places where we weren't physically present.
And it also taught us that a professional manager is always better than an amateur doing the best they can. We had really learned a lot and felt like we were pretty decent managers of our property and had resisted the additional fee of a professional manager. Yeah. And then when life forced us to take that on, we really quickly saw that it was a better financial move for us to pay someone who's a pro. So that was another life lesson that in hindsight, we wish we had learned sooner. But had we not walked through that 15 years of self-management, I'm not sure we would have the level of understanding that we do today. So it was all part of the plan.
Yeah, that's definitely the case, right? So you initially were your own property manager, right? And I think what you have shown with your experience that if you want to scale, you just cannot scale, particularly if you have another job or family that you want to take care of, that it just takes too much of your time. and then you cannot grow. But having done that for 15 years obviously gives you a lot of advantages when picking a professional property manager, because you know what they are supposed to do, and that turns you into a much better asset manager, right? So I would say for someone who just starts out maybe with a duplex or a fourplex, it's not a bad idea to initially do it, right? Just to get the experience and see how everything, all the issues that they have, so that when they pick a property management company or a property manager, that they at least know what to look for, right? There are a lot of nightmares we know out there in single family and duplex and triplex and fourplex, as well as obviously multifamily, where we are more active in property management, where many property managers are just absolutely terrible. And as an asset manager, it's absolutely crucial to find the good ones, right? So what you have started out really, right, with that duplex is something I think is not talked about enough. It's really that house hacking, right? We have talked about this a lot particularly with service members. And there are a number of military service members that have been highly successful, that live at the outside of a base, and they use their housing allowance to buy a house, whether it's a single house or a duplex, triplex, and then rent it out to other service members. And as a result, then they can live there for free and eventually get additional income. And they can have been able to build that portfolio. So what you have done, obviously not as a service member, but it's the same principle, right? And I think that's really important for also, particularly for the younger listeners, to understand. You can start out like this just to get a taste of being a landlord, right? By doing house hacking and then growing from there. But I think that the key message is, if you really want to grow, you need to remove that property manager hat, unless you just are able to build that team and forget about everything else. But if you still have other activities, you need to hire a property manager in order to grow fast.
Good.
Well, and what you're talking about with the house hacking idea, Anton, I think is really important and has a lot to do with our passion right now. When we got started back then, we had a very limited income and really not a lot to work with. And we were looking at our options and saying, what do we have to work with? Well, we have our own hustle. We don't have dollars built up in the bank, and we don't have a huge monthly cash flow to work with. And so that beginning duplex we bought on a land contract from the seller, it was trashed inside and needed a lot of work. So we'd put our kids down in the one room that was decent to bed, put them down to bed and work late into the night. And we also borrowed the down payment from one of our parents and paid it back over 5 years. So when we look back on our beginnings, we feel very strongly, if we hadn't had someone help us get that snowball started so we could start rolling it over into the equity in this home, helping us purchase the next one, things like that, our income was never going to be a big shovel to pour into our investing. It was going to have to start with a small snowball that included our own hustle and sweat equity that we could then, with savvy skills that we learned along the way, roll into bigger things. And that's our whole portfolio now basically came from those first 2 duplexes. We haven't poured much other cash into our investing because we haven't had it along the way. It's been the snowball effect. So now our business with Common Grace Capital is really trying to open up that opportunity for other people, not just in church ministry, but there's a lot of service professionals who are providing community services to our communities and not being compensated nearly to the level of their influence. So social workers, firefighters, teachers,
military too, like you mentioned.
Yeah, so we are hoping that with our syndication, our real estate syndications, that we can not only provide great investments for accredited investors, but we have a Get Started program that we're developing to allow people who are in a situation like we were to come in at a lower level and learn the process and be able to also be passive investors so that they're free to continue to do those really important community service jobs that their heart is in, but will never pay them what they deserve to be paid. So our path and what we feel like real estate has gained for us, not just in supplementing our cash flow, but also the time freedom to stay in a job that's never going to be a six-figure income, is really driven why we started a business instead of just continued our own personal passive investments or active investments as well. So that's where our heart is.
Yeah, Lori, I think, really captured it when she said we want people, whatever their ministry or calling or whatever it is that they've been, they're committed to, what their passion is. We want them to be able to stay in those places that need them, not just the places that can afford them. And so if we can be a part of helping make that happen, that's a big area of excitement for us and an area where we feel like we can help make a difference. So we're looking forward to that and enjoying the places where we've been already able to step into that and lean into that. So
yes, that's great. What you're also really, what your story shows, right, and obviously over the last 10 years, in particular last few years, there has been a lot of coaching programs and everyone else telling us, so you can double your money, right? So it almost turned real estate investing into a get-rich-quick scheme. But your story shows it takes time, right? Just start early and work on it, and you can, even with very limited income, you still can grow your portfolio. Obviously, it's the cash flow, the excess cash flow that helps you then to build your portfolio, but also appreciation over time, right?
Yes.
And that's an important lesson for everyone. Wow.
Yeah, and it's that balance, because it's not devoid of risk. You still have to be willing to take a risk with what you have, and yet it's figuring out how to measure that risk, how to define exactly what those risks are, and then make good decisions based on good feedback and good advice from people like you and from the real estate guys and others that are mentors and people that have just been down the path that can help guide you forward, so that you can identify what the risks are, but still be willing to push forward and take the steps that you've got to take, because you're never going to completely avoid that little twinge of, oh, what if, when you take steps like this, because you are taking risk, but you're also
in any investment,
you're also having the opportunity to make a difference. And that's another piece of the puzzle. Like when most of the properties that we're purchasing now through our syndications and even our individual personal portfolio are value add properties where we're stepping in. They're the kind of houses that nobody wants or people don't want to live in. And we're able to be a part of rejuvenating that particular home and moving it from an eyesore in the community to something that's helping to bring up property values, providing a good housing for people. And then we get to come alongside and kind of either manage the property, asset manage the property through good, solid management that cares, for our residents and provides a great place for them.
Yeah, great. I think it's also important to point out, and you started out in that world, right? Just because you do not have much income doesn't mean that you cannot do it, right? So yes, it's easy to rent, right, somewhere, but the reality is many renters struggle, and they will be in that struggle phase for the rest of their life if they continue to rent, because with inflation, rents go up, right, and they continue to struggle throughout their life. And I would say the best example really to show it in a game form is probably Robert Kiyosaki's cash flow game, right, where when players receive their assigned job, right? So if someone is a janitor making a very little income, and then they're all frustrated. Oh, I'm only a janitor. I make very little income. And then the doctor is very excited that he is the doctor who has all that income. However, the actual monthly expenses are also significantly larger the doctor has. So in reality is, with that house hacking model, it's easier for that janitor, right, to actually get out of that rat race than it is for a high income earner, because the expenses can be much easier covered by when you have a much lower expense structure than what obviously high income earners have. And you guys have essentially shown that model of that game, right? Obviously we're not janitors, but it doesn't matter what you have.
It's the number.
If you are a minister and you have a lot of kids and then you adopt kids on top of it, that's tough, right? So and it shows that it can. If you show that it can be done, it shows that most people can do it.
Yeah, I'll never forget. We play the cash flow game quite often, and we force our kids to play it a lot of times with us. But I will remember the time we were sitting around the table, and that light bulb went off. That the janitor has an advantage in how quickly they can get out of the rat race because their expenses are low. And we all as a family high-fived each other that this is actually what our life has been. And here it's actually a benefit that as we look back, that we were, because Scott actually retired last month from his full-time pastoring position. So now we are full-time real estate investors and are officially out of the rat race. And that happened because of real estate. And because of all those principles that you talked about that the cash flow game shows so well.
Yeah. And it's very interesting too. I remember the moment when we were playing cash flow, and I'm feeling the sense of, this is what we're living right now. You know, that moment where that, like you said, that what the game teaches you is actually where our story, the arc of our story follows. And so if you're not, for all your listeners, if you haven't picked up the cash flow game, it's worth the investment and worth what you gain in knowledge in playing it. It takes some time. It takes, an investment of like the resources to buy it, but also the time to play it. But there is some significant practical knowledge that comes out of that works. Definitely. It works in real life. And so, we would encourage that.
Yeah, absolutely. So now you're retired. Congratulations, Scott. So what's your game plan for the next year and forward?
Yeah. So, we closed, we started Common Grace Capital in 2020 and closed on our first syndication project in Casa Grande, Arizona, a 10-home portfolio there in 2022. And so we've been managing that asset. That's been, something that has been a piece of our work now, just being the asset managers for that. And then also just developing new opportunities and building relationships with projects going forward. We've got a couple of projects in the pipeline that we're excited about. They're all in the single family realm, and we have one that will possibly be in the debt realm as well. And so very excited about those projects. We're building a lot of relationships with new investors. As I've made this move, in the world that I've been in, which has been, pastoral work, and I have 30 years in the same church, all of the pastoral meetups and the connections and the relationships there, you got a lot of good friends that are doing the thing that I've been so passionate about my whole life. And we feel this sense of being able to come alongside them and kind of walk them through, just the same path that we learned, and offer them a completely different path than almost all of them have seen or have had the opportunity to walk. And so that's part of what excites us. And then the other piece is there's a lot of even accredited investors that are not familiar with syndications or with the opportunity to invest in syndications. And so our path going forward is really bringing those two groups of people together, doing projects together that help change communities and make a difference on the tax side for our accredited investors and on the cash flow side for our non-accrediteds. And so we're really pumped about the way all of that comes together for us to have a real sense of we've got an opportunity in front of us that's pretty unique and we're very excited about.
And I feel like we've also, as we've made connections and built friendships with accredited investors or people that are more on the professional investing side than where our heart is with the community professionals, we've realized that there's a lot to be said for finding good, solid real estate investments that also have this heart component of they know that their investment is not only a good investment money-wise for them, but has the added heart bonus of help knowing that their investment is providing a vehicle for these other people to join and get started. And is also we've had quite a few people refer people to us that, oh yes, I have this friend that I've wanted to help get started in real estate investing, and can we help them go through our Get Started program that offers them a lower bar of entry and more educational resources. So we feel like we're seeing a lot of excitement around that idea that not only is this a good investment, but it's a way that people can bring along friends and neighbors that haven't had an opportunity to be involved in this type of investment before, and we're willing to hold their hands for a little bit so that they can get started in a way that a lot of time syndications aren't able to do.
Yeah. And I think you remember, you and I were at the same meetup when George Ross made the comment that more money has been lost in real estate than been made. And that piece of the puzzle is one that I think prevents a lot of people from being willing to step into real estate investing. And when you're with the right teams and you've got people that will do the right thing, that you trust, then you can start taking some of those steps. And they're baby steps at first, but they snowball and they start moving forward. Like you said, it's not get rich quick. It's a slow gain in your net worth and in your cash flow that ultimately helps not only your world, but helps Main Street as well.
Mm-hmm.
Yes, absolutely. Obviously, there are various aspects of real estate investing, right? You have the speculative element to it, and those, when they go wrong, they hit the news
Right.
the biggest, right? Because everyone loves to hear about bad news.
Yeah, right. That's what sells.
Yes, that's what sells. And then it's obviously scares a lot of people away because they feel, well, real estate is a very risky investment. Can it be risky? Are there always risk attached to it? Absolutely, right? But that's the same principle to any other type of investment, right?
Mm-hmm.
Yeah.
But when you look back, right, what were house prices in the 60s compared to the 70s, 80s, 90s, the 2000s, and today, I think we can all agree whoever bought a few decades ago is in a pretty good position, right?
Yeah,
so
absolutely.
And so I think that's really, as long as you know what you're doing and you invest with directly, knowing what you're doing, or with others that know what you're doing, then that's really the right path, right?
Absolutely. One of the things that crossed my mind as we were really beginning to start taking these steps going forward, I dropped my car off with the mechanic. And the thought rolled through my mind, why do I not work on my own brakes? And why do I take that to them? Well, it's because I want this car to go to a professional that knows what they're doing. And then I realized too, the mechanic is a friend of mine. And so he's taking that risk. He's the one who is, bearing the brunt of protecting me and my family in my vehicle, because he's willing to take on that particular task that's so critical to life and safety. And so you're never, like we said, there's a piece in which you're always taking on risk. It just depends on what the risk is. And what really matters is, are you going to find some people that have the experience, that have made the mistakes, that, can help guide you through it. And I think finding a great syndicator and, somebody, good mentors that can walk you through where, be able to point out where the landmines are and help guide you through that path is really, really critical. And you played a big role in that for us too. I remember that conversation we had, and I was looking at that portfolio in Arizona, and I was saying, okay, Anton, here's what I'm looking at. And you were asking me great questions and really pulling out of me the information and then helping to guide. Okay, these are some things to watch for. These are some things to look out for. And we're really helping us be successful with that. So
I feel like another point to that the risk of real estate is, I mean, this current landscape, the economy and the environment that we're in, that's what everyone's top of mind right now is how risky is this and how can I trust it? And when we look back, we owned those 2 duplexes through 2008, 2009. And we were very much less savvy about the economy and even being cognizant of what was happening. What we knew at that point in time was our rents are climbing and we're having more people interested in renting than we ever have before. And now looking back, we realized what was happening was we had fixed rate financing on those homes. Our expenses did not change. The economy, though, provided a way bigger pool of people who needed a solid rental. And we had 1,800 square foot single family homes with a yard. So people who were losing their homes were wanting to downsize into a rental that still felt like a home. So our duplexes were a hot commodity. And then in good times, we found that people who are moving up in the world are coming from apartments into our single family homes. And we realized by looking back that single family homes is a really sweet spot for us because of that, because of the huge amount of, we feel like there's more people interested in renting those on the upside and the downside. And then we had just I felt like, for us at least, a security in our plan B exit strategy of being able to sell single family homes or duplexes to not just other investors like an apartment building would be, but just to individual people. And so as far as risk management, that felt like a big one for us in the middle of uncertain economy. And so that's kind of unintentionally become our sweet spot, but it's one that we still really feel like we're committed to. And we feel like there's a big opportunity for community development and developing the things that are really important to us in developing that single family home model that we've been doing so far, at least.
Yeah. And going forward, as we look at the economy and where things stand right now, one of the questions is it a good time to be an investor? And there's still a housing shortage. And so, many of the rentals that are coming up for rent are seeing multiple people that are still looking to get into them. And when we can provide that workforce housing that people can, like we experienced in 2008, can earn their way, or before 2008, where people were earning their way up into that property. And then after 2008, when people were unfortunately losing their way down into that property, when you're in that sweet spot in a market that has good, solid diversity of jobs, you're in a pretty strong position. And you can help meet the needs that are in that community as well, because there's nothing worse than needing a place to live and not being able to find one. And so when being able to be a part of that as well helps really, from our perspective, it's clear that there's still plenty of opportunity out there. And there's plenty of ways to continue to make, again, like you said, not quick, but steady over the long haul, good, solid investments that produce over the long run and provide, great community help, but also a great return for investors.
Yeah, definitely. Now, when we look at the Real Estate Guys Summit this year, there was a lot of talk about de-dollarization, loss of value of the US dollar. Obviously, inflation was a big element there, right? And as a result of that, rents likely will go up, right? Maybe they will stay flat, maybe they will come down a little bit, but over time, it's more likely that they will go up. And if one can get financing, that is ideally long-term financing, but at least 10 years or so plus, it's a big plus, right? That in a inflation environment essentially becomes an asset, right? It's a permanent payment, while the income stream is going to increase in most instances in that environment.
That's been our experience too, by the way, Anton. I mean, we bought that first duplex in 1997 and we owned it until 2021. And, when we first bought it, rent was $725 a month for one side. When we sold it, it was over $1,500.
Yeah, and our mortgages stayed the same that whole time.
Yeah. So, and we were even able to, do some cash out refi and take some capital out of it. And at times we were able to make that change, take the cash out, and because of the term of the loan, maintain the monthly payment at about the same rate. And so there's some great options there. But again, it's a long-term mindset. It's not just, like you've said, it's not a get rich quick thing, but you do have those inflationary forces that are tailwinds for you, both because of the debt, but then also because of rents. Holding that fixed rate, keeps your costs very steady while, rent slowly ticks up as the economy grows and inflation, increases what people get paid and they're more able to pay more for rent.
Yes, absolutely. As a side note, just try to avoid states where property taxes explode and insurance costs goes up like we have never seen before, right? But you guys are in a market and have invested in a market where it's only on the insurance side it's less of a concern, right? And that doesn't matter whether it's single family or whether it's multifamily. It really applies to all asset classes. Right?
Yeah, absolutely. Yeah, it's across the board.
Yeah. So obviously there are many investors that are doing single family portfolios, right? And BlackRock does it and many others do it. So while we focus mostly on multifamily and larger properties, there is a space for single family portfolios. You mentioned, Laurie, that you want to stick to single family because it also fits your mission in a way, right, of helping others. Is that a long-term view that you don't want to go into a larger apartment segment and stick to that single family space, or was there potentially a shift in your view where we say maybe we can scale what still meeting our mission, but that we can scale it to faster with going into larger properties?
That's a great question. I think that definitely we will be exploring and branching out into other asset classes. But I think that no matter what asset classes we branch out into, there will always be a single family component to our business. I think that will always kind of be where we came from and our bread and butter. I don't think we'll ever abandon it, but I do think that we will, in the near future, even add other asset classes, whether it be apartment complexes or, a variety of other things, because our purpose is to, first and foremost, provide investments that help the investors be able to have the life freedom that they are craving. And then those added bonuses of being able to impact communities in various ways isn't just limited to single family homes. It is our deepest well of experience. And I do think will always be our bread and butter, but we're personally invested in other things that I'm sure will end up in our syndication business as we feel that we have the expertise to offer that to people beyond our own investments.
Yeah, and of course, and this is from your experience as well, but when you get into an environment like a multifamily community, you can impact that entire community. I mean, you can have impact on the culture of that community. You can turn a place that's, at times even dangerous into a place that's a safe place for families and for people to just have a quiet place to be. And again, that's part of our heart. I mean, one of the things that we've talked about is it runs through my head. They're going to be celebrating birthdays in the home that we provide for them. They're going to have Christmas here. We want this place to be a place that they're happy and proud to come home to, and
whatever their income level.
Yeah, wherever they are. And so, I think that is definitely on our list of places we want to go. I mean, we've talked about mobile home parks as well, another opportunity to impact communities and to create cultures that are really positive for those communities. And so, the vision's pretty broad. We want to stay in our lane as we get started, but we're definitely checking the mirrors and finding out if there's other lanes available. You know what I mean? So
yeah, that's good to hear. So thank you very much, Laurie and Scott, for being on today. That was a great story and really unique, right? So how could our listeners reach you guys?
Well, you can always check us out on our website at commongracecapital.com. That's probably the easiest place to find us. And then you can reach us through email or whatever. We have an offering there, and be glad to offer this too to your community. But I had an opportunity to be a part of the book, Persistence, Pivots, and Game Changers. It was put together by Kyle Wilson and his team. And that chapter, we wrote a chapter for that book, and it really tells our story. And if somebody wanted to read more about that, then we'd be glad to send that out for free. They can just contact us. You can get a hold of me at scott@commongracecapital.com. You can just shoot an email to me, and we'll be happy to send you a PDF of that chapter in the book. So
you can also connect with us on LinkedIn, Instagram, Facebook, just our personal names. So we have personal accounts there that we'd be happy to have people reach out to.
Yeah, great. So I certainly recommend that anyone who is listening, who has an interest in that story, reach out to Scott and get that PDF. It's a great story, right? It's a short read, but it's a great story. So it's only worthwhile to spend a few minutes reading about you guys. So thanks again, Laurie and Scott, for coming on today. And
Anton, thank you.
Success.
Yeah, thank you. Thanks for being you, and Sandra too. We have just so enjoyed getting to know you guys and spending time together, having meals together and all. And man, it's just been a real treat. We've learned so much from you and continue to, not only through your podcast, but other podcasts that you're on, and just the personal relationship too. Even phone calls where you've helped kind of direct us and guide us along the path. Man, we sure appreciate you.
Yeah, appreciate your kind words. And again, thanks for coming on. Bye-bye.
Thank you.
All right, bye.